Business News Network. We cover the latest tech, entrepreneurs, and innovative companies in the cannabis industry. And the way we do that is by three different avenues. We create original content, we have a B2B directory, and then we have private B2B networking events. So we are really building an ecosystem for the entrepreneurs in this space and investors to find the upcoming startups that are coming into the cannabis industry. We launched a pilot in 2015 to test it out, and then officially launched in July of 2016 and have been growing ever since. We are being viewed in all 50 states, 175 countries. We have an email list of 13,000 subscribers and a social media following of over 38,000 followers. And that's a little bit about us.
That's fantastic. So what is it that you are looking to our investors for today? Kind of just a brief overview. Are you looking for funding? And advice on funding? Are you looking for financial advice? Where is the area today that you're feeling like you need the most help?
Today's focus is definitely going to be more on the fundraising process. I have a couple questions that I would love to ask, and then I do actually have a couple slides from my pitch deck just to get some advice and feedback on as well. It won't be my whole pitch deck, but just a few key areas I would definitely love insight on.
Okay, somebody said that they're hearing background interference. I don't hear anything. Susan, will you let me know if that continues? Okay. All right, I'm sorry about that. Are you? We're having some technical difficulties back. We've been on hiatus for a month. We're a little out of sorts here. Thank you so much for that, Adelia. Lily, would you mind doing a quick introduction?
Yeah, so now I hear the echo. Let me see. So is it still there?
I don't hear it.
Okay, so my name is Lily Belfort, and I have been working with entrepreneurs for 11 plus years, helping them with their funding. And so I started a company called Atelier Advisors in 2007. And the idea was to provide investment banking services to early stage companies, but starting to work with startups, I realized it wasn't really about the transaction level work, but more about the operational work, like really, rolling up my sleeves and helping them understand how they're making money. So I launched a division called Finance for Entrepreneurs, and Finance for Entrepreneurs is an educational platform that has free and some paid content just to help entrepreneurs, like with all the nuts and bolts that they really need to know. So I'm really passionate about helping entrepreneurs. My dream job, what I love to do is really just researching companies, like understanding, what makes a successful company. Why are some companies billion-dollar companies and why do some flop? So I have something called a weekly Wednesday webcast that I do on YouTube. That's a free broadcast that I do, and it's just all case studies on how companies became successful. So yeah, and so I'm excited to chat with you guys today and share some information with you.
Hello. Hi. Oh, Kara, your speaker is muted.
We're just having all kinds of fun over here. Sorry about that, Jody. Welcome. I know your camera isn't working today. It seems to be the day for technical problems. But we are very happy to have you here, voice only. Would you mind just doing a quick introduction?
Yeah. Just so you know, I may be able to get on the camera with my iPhone, so I'm working on that now. So in a few minutes, you might see a face pop in. It will be mine. But I'm Jody Weiss, and I'm so happy to be here, and I'm really so happy to have the opportunity to share Lily Balfort's work with this entire community. And so let me give you a little bit about my background, and then I'm really looking forward to brainstorming about how we can help Adelia. So I'm a serial entrepreneur and a social activist. And actually in my early career, I was a sports agent. I did licensing deal, book deal, appearance deals, all sorts of things, product launches, etc. for celebrity athletes. When I left that company, I launched my first company called Sponsorship Opportunities, which helped nonprofits find money from the advertising and PR side of a company's budget. So my clients were like Cirque du Soleil, Churchill's Down, the Washington Ballet. And so if you're trying to build a hybrid company, a for-profit company with a nonprofit side, there are ways to raise capital in this beautiful hybrid concept of making money, but also taking profits from that for-profit business and giving it to charity through a nonprofit side. So I sold that company and went to work on the 1996 Summer Olympics with the two grandsons of the founder of Adidas. And we did about $5 million of business, client entertainment. We produced the House of Blues on the Olympic Park, et cetera, et cetera. While I was there, I went to a grocery store and I picked up a bottle of Paul Newman salad dressing. And ladies, I swear my knees buckled in the aisle at the grocery store when I realized that he had given away $17 million from the proceeds of popcorn and salad dressing. And by the time the man died, he had given $250 million away. So that model, it's called a for-benefit model, was just mind-blowing. And I ultimately decided to launch a brand by the name of Peacekeeper Cosmetics, CAUSE, which is a cosmetic line that gave donations to urgent human rights issues. That was an all-benefit company where all the distributable profits after taxes went to charity. And that company launched with a 2-page spread in the New York Times Sunday magazine that read, "Love, Valor, Lipstick, How the Beauty Industry Got Hitched to a Higher Purpose." We are launching Henry Bendel, Fred Siegel, Nordstrom's, Whole Foods, etc. This is what destiny looks like. That company grew into 500 stores. We were just going into Safeway with 1,000 doors when Hurricane Sandy came in New York State and destroyed that company. And so what I've learned from that experience, entrepreneurs, is to hold on deeply and passionately to your vision, and also at the same time have no attachment to anything, because life has different agendas perhaps than we do. So we do the best we can and then we let go, let God. That's my background. Since Hurricane Sandy, I've been doing incredible sort of large scale consumer facing strategy and marketing campaigns. And I'm now in the cannabis space, advising on brands, technology opportunities and other things.
Awesome, Jody. Thank you so much. I am so thrilled to have you here. You've got such a fascinating background. And one day we're going to have you on to hear the full Hurricane Sandy story. It's definitely a good reflection on, just as you said, being able to let go of everything. But today we are here to talk about building. And so Adelia, I'm going to let you go ahead and start asking these ladies questions.
Perfect. Cool. Sounds good. So the first one is going to be more on the outreach for investors. The past 2 years, I have created my own internal process for investor outreach. The first year, I did it completely wrong. I created an Excel sheet and put every single investor in there, reached out to them, even if they weren't investing in a company like DCN. If I knew I didn't know anybody from them, it was a bunch of cold emails, applying on sites, and I thought it would be great because cannabis is like the next big thing. Maybe I can change their mind. You never know. And it didn't work. I did get a lot of responses though, and it was great in the sense for DCN's model, because now they knew about us, but they weren't going to invest in us. This year, I took a lot of that learning lessons, and I realized that I needed to be more strategic on this approach for investors. So I started researching adding only investors who invested in cannabis, digital media, media or early stage startups. And, then went to look at their portfolio, and then went to look at who they knew that I knew, and trying to really get that glue a little bit closer. So with this, my question with this new process, do you have any insight or tips on how I can be even more strategic within this new approach?
Yeah, I think you're totally doing it right. Find investors who get media, because you're not always going to find an investor who is going to invest in cannabis media. And if you do, that person's probably invested in your competitors. So you really have to cast a wide net. And I would say, looking to in the previous segment, if you didn't get a chance to watch it, go ahead and go back and watch it. We talked about, cannabis is a relatively new space. So we want to find companies in other sectors. So for your example, yours is media. Find other successful media companies and see who funded them, how did they scale. I'll just throw some things out, ad models, right? That's totally changing. It used to be you just put up a site and then hope you'd get a bunch of advertisers. And now there's just native advertising. There's different methodologies people are using to monetize sponsored content, that kind of thing. So yes, I would go back and study successful media companies and see who funded those companies. Yeah.
I like that. should I go in to my next question, or Jody, did you want to chime in on that?
So just to frame it, as you saw, I jumped off for a second. To frame your question, is your question, how do I really target my investors?
Yeah, it's more getting even more strategic in this process, getting in front of the right investors. You know, I know investors' time is valuable just as much as mine. So I want to be strategic.
Yeah, so I agree with Lily. I think you have to look at other companies and who their sponsors, or excuse me, who their investors are, if they list them, or you go on AngelList and you can see what angels have invested in. So there's a great platform called AngelList, and you can really check out and see what investors are investing in. There's also in your local community, in anyone listening in your local city, there are angel groups. And I would go to their open, community gatherings, go meet those angels. I also would recommend hosting parties, and very private for qualified investor kind of parties, where you can have someone who's in that network of media investor, that community of investors, invite other people who might be interested. I would join meetups where media and marketing people hang out, so that you can get to successful people in the media who would also love what you're doing. But I think because you have a cannabis focus, you should also really focus on the key gatherings for investors in cannabis. Cannabis investors love auxiliary businesses, right? So businesses that don't touch the plant, and you're a perfect auxiliary business. I would be totally going to the women investing in NCIA, that women's group. I would check out ArcView. I would check out Canopy Boulder. I would create a buzz around you, so that cannabis investors say, my God, we've got to get on board with what she's doing.
Perfect. Thank you. So my next question goes more into my deal room. I have created a deal room for investors so that I could just easily share the proper documents needed that they would want to see, such as my company docs, my pitch deck, financials, business plan, etc. When do you feel is the most important time that first, what do you feel are the most important things I should have in that deal room? And when do you suggest I send access to that deal room? Should I just start with just my pitch deck, get them interested, or give them everything right away?
I would say there's a due diligence checklist. I can email that to you. I can post it down below. There's kind of a standard things that you're going to need. And I think the most important things, like the standard things are just, your docs of incorporation, your board minutes if you have a board meeting, just, important documents. Like I always say that your due diligence folder is basically everything you talked about in your presentation. So like here's what you don't want to do. Sometimes people will just talk about, oh yeah, we have this customer and this customer signed up, and maybe they had a conversation with the customer, but they didn't have any letter of intent. There's no real commitment. And then when you do your due diligence, just for everyone who understands the nomenclature, data room is just a place to keep your due diligence documents. So your due diligence folder or your data room, you should have those customer letter of intents in there. Like, you're a media company. So you're like, oh yeah, Nike's been talking to us and da-da-da-da-da-da. And then so you pitch that and the investor's like, oh, this is really great. Yeah, they have some things lined up. I can see some revenue coming and this looks like a strong company. But then during your due diligence, they open your data room. They say there's nothing from Nike. Maybe you had like a coffee with Nike or something like that. So as an entrepreneur pitching, you got to be careful that you don't overpromise and underdeliver. So you want to make sure that anything that you put in your pitch deck, anything that you pitch during a pitch meeting, you can back up in your due diligence folder. So it's, of course, all your documents, all your customer letter of intents. And here are some things where people get really tripped up is that I've seen scenarios where an entrepreneur will start a company and then they'll say, okay, we want a salesperson. We don't have any money to hire them. We're going to give them 1%. This other person is going to build our website. We're going to give him 1%. So they have it's called your cap table, your capitalization table, like who owns what. That should be your due diligence folder. So then what will end up happening is you're going to get funded and all of a sudden these random people who no longer work there own, capital in your company. And that can be a really big mess. There can be legal disputes is another really big hot button. So for example, there was some dispute you had with a former employee. you guys sent emails back and forth, I hate you, I'm leaving, and whatever. And like, it never really got legally, separated. So ideally, if you have any disputes with a co-founder or an employee, just make sure you have like a legal document that says, okay, your termination date was X, you no longer work here, you no longer have any equity, so because the Facebook is the most perfect example of somebody coming back later and saying, oh my God, like I totally started that company with them. What are they doing? And like, Bumble's another one. Where it was originally the Tinder people that it evolved into Bumble, but that was the story, that there was discussions like, oh yeah, we're co-founders, we're building this company together. And then, nobody cares when the company is failing, but then when the company takes off, everybody starts coming back from 3 years ago. So in your due diligence folder, make sure that if there's any like loose ends, that you have all the legal documentation. So if that person comes back, they catch wind that you're raising $10 million. Like, oh, wait a second, I co-founded that company. You want to make sure that you're like, nope, no, because we have the document right here. That way the investor, it's not going to be swayed by this person complaining about, you can't fund them without me. I'm part of this company. So just to summarize your question, I would say, I'll leave you a link below, all the kind of boring stuff you should have, any document, any contract around your business, any employment contracts, customer contracts, but to make sure that you've gone through and you've dotted your I's and crossed your T's on any legal disputes you've had in the past, and make sure that your cap table is really clean. So your cap table, again, is just who owns the company. So ideally, it's just you and your co-founder. One big problem I see is entrepreneurs will start giving away little bits everywhere, and then it just becomes a huge mess, and then they have to, depending on what your term sheet says, they have to go out and get sign off from these people. Sometimes when you give people equity, they can negotiate that they have the first right of refusal, right? That they would, during the next round, they get to come in at a cheaper price. So you really want to make sure that your cap table is clean, your documents are really clean, because that will trip you up. You could meet an investor and then they're like, yeah, I want to write a check. But then there's all this legal stuff that really gets in the way. So yeah, keep it really clean.
Perfect. And you just saying that, I think one of the things I learned right away was vesting. Vest
Yes.
The co-founders, even myself, any of us that we do give equity away to. So that's
and that's that trips up entrepreneurs a lot. So for the audience, vesting means that if you have equity in the company, it vests. And you would think that, okay, I started the company, it's my equity, but when you bring in an outside investor, that investor's going to say, okay, now you're vesting. Like, we're going to give you this money, but now that equity that's yours, it's going to come to you in tranches. Like, say it's a 5-year schedule, it's a fifth every year. And the reason they do that is because they don't want to give somebody a bunch of money and then they own all the company and they can just take off. And the same thing from your perspective. If you're an entrepreneur and you're hiring somebody and you're saying, yeah, okay, we're going to give you, 1% of the company, even like an advisor taking 1%. You want to say, okay, you are an advisor, you're going to get 1% and you're going to invest it over a year. So every month you get a 12th of that 1%. I don't know what that calculation is, like 0.1016%. But that way, you don't just give out a 1% to somebody and that person just doesn't do anything, right? So your vesting schedule basically is keeping them honest that, every single month, as long as you're active. And let's say, for example, you give somebody equity and then they just take off, or they're just totally worthless. You can say, wait a second, you know what? You haven't called us in 3 months. We don't hear from you. We're going to terminate this contract. That way you don't get like a bunch of people getting equity and doing nothing in your company. Yeah.
I just want to make a point about that. It is such a huge misconception that people have about starting their businesses.
Mm-hmm.
Hey, I'm going to give you 25% of the company. I mean, I offered someone who wanted to contribute very little, 1%, and they acted like I'd just thrown like garbage in their face. I mean, there's this kind of misconception that when I come in, I need to claim 25% of this business straight away. And that is not how you do it at all. And yet when I talk to entrepreneurs, I hear this over and over again, this massive misconception starting at the very fundamentals of the business.
Yeah. And I did this cap table video on YouTube, and I can link it down below, but it shows people like step by step, like if you start giving everybody 25%, guess what? You're going to have 1% when you exit. There's a company called Angie's List. And everyone thinks, oh, Angie Hicks, she's so successful. She started this company. We see the commercials everywhere. People don't realize she only owned 1.7% of the company when they exited, because she kept raising capital, giving 25%, raising capital, giving 30%. Like, she just diluted her own shares. So that's why I think it's so important. Like, you have the cap table and you totally get it. Like, you can see the numbers. Like, okay, it's me and my co-founder. We both have 50%. We're going to get this advisor. We're going to get that person 1%. And we're going to track it like a hawk, because we don't just want to start throwing it around and, not tracking it. So everybody who gets even 1% of your company, you are tracking their performance every single month. And if they're not performing, you know what? Sorry, the contract will state that you can terminate them. You don't just want to give everybody, 1 or even 0.05% unless they're really earning it. Yeah.
My next question I'll go to Jody is going to be on our financial model. So at DCN, we built 3 strong revenue models focusing on advertising, our B2B directory, which brings in monthly revenue, and then our B2B events. How many revenue streams should a startup look at incorporating within their model?
Wow, that's a great question. The way I would frame that question is based on low-hanging fruit. What is the easiest means to drive what I call foundational revenue, the kind of revenue that will stabilize everything else, the kind of revenue that will fund yourself as the founder, and then probably the second most important salary is the salary of either the salesperson or a person who can raise additional capital, right? And so what I like are what I call my hero products. Hero products are they're just your bread and butter products. They just drive revenue every month, month in, month out, and they can scale. And so I'd rather a startup have one really clear revenue stream that's sticky, that's low-hanging fruit, that's scalable, and grow that revenue stream and do it well before adding a second, a third, a fourth, and a fifth revenue stream. Because what happens is that you're a small staff and then you dilute your time and focus off of the best low-hanging fruit opportunity. And then all of a sudden you're doing 5 things and you don't end up doing any one of them very well. And so that's what I would look at, like in a strategic planning session. What I do with a company is I really create a breakdown of each revenue stream and the pros and the cons, and how much does it cost to acquire that customer, to maintain that customer, and to upsell that customer, right? And you have to do that across every vertical revenue stream to know, oh my God, we're spending 18 hours a week on this, but we're really not generating the kind of revenue after all costs. We're barely making a profit on this. I think we should sideline this. That's a smart CEO insight. So as an example, when I had my beauty brand, I had to look at turns, which product turned well and consistently, and which product would I describe as my one hero product. I thought it would be my award-winning lipsticks. It turned out it was a nail polish remover made with fermented sugar beets. That product sold like hotcakes. We could not keep it on the shelves. And so I had to terminate certain SKUs that I loved, that I had a big following for, but they actually weren't selling enough to justify them. And that's being detached, unemotional, and very clear that your time needs to be spent on the low-hanging fruit that really drives revenue.
Thank you. My current pain point right now with running a digital media company is that users and content are vital before revenue, to be honest, because without my users and without my content, I can't go towards my business model. I can't charge customers if I don't have users there. We have tested out our different revenue streams, and we know that they're going to work, and we will continue to add them over time. But what tips would you suggest to showcase the value that we are bringing right now when revenue is not that large in our stage of a company?
So you mentioned, go ahead.
I'll jump into this one first, Lily.
Sure.
This is a marketing question, right? And so I would be curious to learn more about how you're getting your story out there. Mm-hmm. And do you have a daily social media calendar?
Yes, we do. And we actually, well, not a calendar per se, but we do have it in our process to make sure that we have daily content going out. That is something that we do know that we need to build more strategically with our, a social media calendar, but we do have a process where every day, every hour there's something going out on all of the different platforms. And we've also learned which content works in which avenue: LinkedIn, Twitter, Instagram, all that.
That's great. So is that internally managed?
Yes.
With one of your staff people?
Yes.
Full time? Okay.
Yeah.
All right. I mean, because that, I think that the more you invest in a social media platform that's exciting, that's sticky, that's innovative, the more you can then convert into other kinds of sales within your company. So I think that's really important. I think you can have the best idea in the world, but without marketing it in a sophisticated way, it won't matter, right? So those are my thoughts.
Say, you mentioned that you have ads and you have events. Events tend to be a higher margin business. If you can put on more events, because I think in the process of pitching investors, you want to show that you have something going, you want to have some kind of revenue streams. I would say if you can put together some events that are profitable, that can show an investor, hey, look, we have money that we can actually start funding the company until our user base grows, until we can actually get more ad revenue dollars in. I think that would be a good strategy, showing an investor that you can self-sustain, that you're not going to investors saying, okay, we need your money or we're going to die, kind of thing. Yeah.
Okay. And I have a few more questions, and then I actually will be going to show you guys my go-to-market strategy, so you guys can see what we have been doing as well, to kind of piggyback on this question. My next question is going to be more on fundraising. And this is something originally I wanted to show both of you my full kind of pitch deck. However, I had a realization and realized, because I'm not approaching, my focus is non-cannabis investors. My focus is media investors, just because they really understand what we're doing. Not that I wouldn't approach a cannabis investor, but my focus right now is definitely focusing on ones that understand my business model. And so basically, I'll go to the question. I know we're supposed to have a variety of different pitch decks, different slides, because depending on how long you get to pitch and whatnot. However, what I also realized was that now I need a cannabis-focused investor pitch deck, and now I need one that's also to investors that don't know cannabis. Am I creating too much work? Is there a fine line that I can incorporate one, just having the same kind of pitch deck, or is it necessary in this space to have two? One that speaks to non-cannabis and one that speaks to cannabis? Yeah,
I would say, and you're not going to like this answer, but I would say you'd have multiple pitches. I mean, you'd have like your main base one that has all the important details. And what I like to do if I'm pitching, because I serve as outsourced CFO and I pitch investors a lot, I will figure out for that specific investor what's important to him or her, and I will customize that pitch deck to that person. Like, say, for example, if you ever worked in sales, or if you understand the sales process, if you're pitching an account, like you'd create a pitch deck for that account. I think of investors the same way. Like, one investor might be really excited about some sector, so you really want to focus in on that. And you can even, if you don't want to, you could have one standard pitch deck, and then create emails, like craft emails that are very specific. Like when I coach entrepreneurs on how to pitch investors, I always tell them your email is the most important piece of it, because that's the first thing they see, right? Like you might have the most amazing pitch deck, but if no one opens your email and clicks it. So having a really good subject line. I would say like the first, and I can give you an example of this, you want to have a first paragraph that really wows them, and then you want to have just bullet points. And when they open your email, like, pow, if you just read the bullet points, what are your highlights? How many users do you have? Those kinds of things. What are your, your retention rates? People come to your site, and how many page views do they look at? That kind of thing. So just really high level detail in that email. And that is where you can also customize. You can make it more custom for each person. But then again, I think it's really a good idea to make a customized pitch deck for each person. As you start pitching, you're going to get lots of really valuable feedback. So you're going to always want to be changing that. Like somebody might ask a question, or somebody might even, inform you of something that you didn't know about a certain sector. Then you can just keep adding and adding. I think your pitch deck is always evolving.
Yeah. I can go to the next question.
Did you want to add something to that, Jody?
No. I mean, I agree with Lily that you have to customize it. I would describe it as, what I do is category A and category B. Category A are those investors that I really customize my cover letter and the deck itself, because I really studied them and I know what they've invested in the past, and I know what their unique opportunity they can have with my company. And I write very specifically. I even create special slides in the presentation just for them. I call them category A investors. Category B investors are investors in the space who even though I've researched, I can maybe make some general edits, but it's not as deep of a dive, and it's more of a generic document. And I believe, and investors actually really care about a personal approach where you learn about who they are, you understand what they've invested in before, and then you really tell them why this should matter to them.
Do you find you have a lot of, you may not get it funded, but that you get some kind of response when you take the extra time to do that, Jody?
I think all the time, because all of this work is all about relationships. And so it's the building of relationships, and whether a company succeeds or fails. So my company was destroyed by a natural disaster, and I have 5 years later strong relationships with all of those investors. And so it's a relational thing. It's a relational thing.
So it's not just a one and done. And this is something I actually learned from you in the Making of the Smartest Person in the Room interview that we did with you. Was it wasn't just, hey, I send you this pitch deck, you like it, you don't, move on or not. Each opportunity is an opportunity to create a relationship with an investor who may not necessarily invest this round or this company, but having a large pool of investors that you have ongoing relationships with makes you more beneficial in the seat of the CEO and gives you more options as you're seeking funding that will put you in the driver's seat ultimately. So I think that's something we overlook and don't really recognize as kind of a long-term play, is building those investor relationships. It isn't just about right this minute.
And also, it's not just about write that check. So I probably went out to 250 investors to find my 15 investors for my company. And many of those people did not invest, but they opened doors in all sorts of other ways, or championed me, or tweeted about me, or just bought my product. And so there's many ways for someone to support an entrepreneur. Doesn't have to be with a check. It's doors that they can open, suggestions they can make, parties they can throw, the whole thing. So,
thank you.
So I have 2 slides I want to show both of you, and then just one last question, but I'll go into the slides first just because I know the time is coming up. So I'm going to show you both an example of a slide that's in my index. It's my go-to-market strategy. So there is, this is the investor deck, so not the one where I'm in-person pitching, the one I would send to individuals like yourself. So let me pull that up. And what I wanted to discuss on the marketing strategy is, what areas do you think we could add or take away? Each of these do have metrics that show that they are working, but again, we're a small team. We're bootstrapped. We're at bandwidth capacity. So how many strategies are too much? So let me go and share my
So Adelia, your question is it too much or too little the information? Is that your question?
I guess, am I doing too many, are we focusing on too many areas in our go-to-market strategy?
Okay.
Let me pull up that slide. Does it show you guys the full screen? Or
Yes.
Okay. Hide that. Okay. So this is, like I said, in our index, and it just shows what we're doing for our go-to-market strategy. We do organic press. We make sure that we're in a lot of speaking engagements. We are building strategic partnerships. Our content, the content that we create, highlights upcoming companies and entrepreneurs. And of course, when they want to share that as well. So that's beneficial. We do advertising with non-cannabis platforms. We go to trade shows. We have our events. And then we also are starting more live segments online. So I just don't know if we're focusing on way too many things. If this is good, if there's anything I'm missing, I would love to hear.
Can I
ask
one thing here, or add one thing? And because I'm curious as well, Lily and Jody, on your feedback on this one. I have always used the Guy Kawasaki pitch deck, and he says 30-point font, and if you can't put it on this slide in 30-point font, it's too much.
Yeah, that's a great point. I was going to say, because your question is, do you have too much? And I think you have too much text, but you don't have too much data. And one strategy I'd like to use is about contrast and about using blocks and stuff. So for example, you have 1, 2, 3, 4, 5, 6, 7, 8. So you have 8 blocks. Let's call them blocks. So if you took a square or, you know, a rectangle or whatever, and made 8 rectangles, or let's say eight blocks, right? And each one was this. So you have, instead of all this text, you have 4 on top, 4 on the bottom. The first block says organic press. The next one says speaking engagements. The next one says strategic partnerships. So they would know all this stuff. And if there's anything that you really want to call to their attention, like you have a current partnership with CCTV and E360 TV, I would put their logos, because their logos, immediately people who know who that is, and it's very quick and visual.
Okay.
So I would say that when pitching investors, they have a lot of ADD. That's really hard for them to pay attention. So I would say make things contrast, simple, consolidate, and just make it very visual. So like they can quickly like look at this slide and in 3 seconds, like just read it, right? They see all the 8 blocks. They see the logos of the things that are important. I think this text would be like exhausting to read.
Yeah.
So I think just, it's all good data. I would leave all of them there, but just kind of reformat how you do it.
So even in the index portion, it should be that way? Because I have that in the main pitch deck, but in the index. Okay, so follow the whole layout of that. Okay.
Yeah. I would say, no, I like the idea of index because I like the slide that's 2 above the media M&A timeline, that's really good. But I would say if it's in the index, I think you can probably, you know, even go deeper, right? But I think that this shouldn't be in the index. I think this is really important because this slide tells me this is how this company makes money. This is like their fuel, right? Yeah. And I think the fact that you have current partnerships shows that you're hustling, you're getting your, you know, brand aligned with other brands. So I'd want that to be like right in front.
Okay.
Yeah.
So one thing I can also recommend for this slide, Adelia, is I would break out those go-to-market enterprises that are revenue drivers and those that are marketing drivers. So for instance, speaking engagements, advertising, and events are revenue drivers. They drive revenue to your company. They're actually a revenue stream. And I would separate them. So I would have go-to-market strategy, revenue driven outreach, and then marketing driven outreach, so that it's really clarified.
Okay. Perfect.
Yeah, and you could even make an interesting graphic where it's like the 4 blocks that are just awareness are first, and then the bigger blocks are the revenue, right? So it's like showing the investor very visually like, oh, these small blocks are where we put out our content, and then they evolve into bigger blocks, which are the money.
Okay, perfect. And then I also wanted to go into the exit strategy. So comps have been a big pain point for myself because a lot of, so these comps I know are not strong. I've realized that, you know, they're not necessarily the right kind of examples that I should utilize for DCN, but a lot of the companies out there in the media space that are similar to DCN, I'm unable to get, you know, exactly what they were acquired for. And that's been my pain point. Like what would be the best way to approach this if I don't have exact numbers or comps?
Well, that's to be expected because it's a relatively new space, right? So usually it takes about, I'd say the minimum is like 3 years, the max is like 15 years for a company to exit. So there hasn't been 15 years of cannabis media companies out there. So the investor will totally get that. And I think what you're doing is totally good. I wouldn't call it exit strategy because I feel like when an investor sees exit strategy, they are thinking, oh, this person's looking to exit. And that's what, they don't want to invest in an entrepreneur who's like, oh, I got to make money. I got to just exit this company because that's what an investor needs to do if he or she is investing somebody else's money. They have to make a financial return. But what ends up happening is sometimes you get entrepreneurs who are just so focused on the money that they actually just want to quit when times get tough, right? They just want to give up. So I wouldn't call it exit strategy. I would say comparable transactions or market landscape, something like that. But I like what you're doing as far as, you know, pulling in companies. They're not going to expect you to have any real multiples from cannabis exits because there are none, you know, and if there are, they'll know them as well. So I would just do your best. I do a lot of this research, and I research just because I love to do this kind of stuff. And it's the information sometimes out there, you just have to dig. Like for example, if Marijuana Business Daily got acquired by a publicly traded company, there's an annual report, and in that annual report, you can go in and search in what they've said. And sometimes they will list, because the annual report is for their shareholders. They have to give information out. So we acquired Marijuana Business Daily for $420 million. And I just made that number up because it's 20. So yeah, so you can research the information and pull it out, but don't get frustrated if you can't find tons of them because there's probably not tons of them that exist.
Okay.
And I just want to comment that you can also describe for an investor, you know, compatible, as Lily described it, compatible. I mean, I don't know what the word is. I've always used exit, but I see what Lily's saying in terms of compatible businesses. You can also look at one option is to be acquired. One option is to go on a U.S. or Canadian exchange, and another option is to be is to build or create a joint venture. And so there's 3 or 4 ways that investors can get their money back. It's not just an acquisition. And, you know, even an ESOP is a way where you pay the investors back, and then the employees own the company after that. And so I'm sure Lily and I can both help you structure this page so that it's more diversified, because I have found that different investors want different things. Some investors just want to exit and they want a 5 to 7x return. Other investors get really excited to think, well, maybe we can go on the exchange and do an IPO or an IPO or something. Not an ICO, that's in crypto. But I think you see my point. So there's different ways to structure this page that shows an investor some options in which they can get their money back.
Perfect.
Yeah, I agree.
Okay. And then we'll go back to, I think did it unshare my screen?
Yes.
Okay. And then this next question that I have, or I don't know if there's any other slides you guys would like me to show you, but I do have one more question since I know we're coming close on time. Either or.
Whatever you want.
Okay. So this one is actually more of a topic discussion, and I find it very important to ask because with DCN, you know, we only talk, like, not we only, our audience are entrepreneurs, our audience are investors as well, but the main thing is entrepreneurs and startups. And I feel, you know, there's a lot of pressure for them to feel like they have to raise capital. Mm-hmm. I personally, us as a team, we know that to meet the next kind of milestones and to scale the company to what we need to do, we do have to raise capital. Yeah. But what is your best piece of advice for those entrepreneurs who aren't unsure if they should raise capital?
I would say the longer, I use the example of Angie Hicks when she, you know, raised so much capital that she only owned 1.7% of the company when it exited. I would say that the best way to build a company is, you know, funding it through your own revenue. I said the best capital you can raise is customers' revenue, right? Money from your customers. So I would say that the longer you can do that, the longer you can bootstrap and just bring in customer revenue, the better, because you're self-sustaining yourself. And then when it does come time to meet investors, they actually want to meet you because they're saying, oh my gosh, look at this company. This is what they've done with no money. Just imagine what they can do with some money. So I would say that there's kind of this myth that, oh my God, raising venture capital is like how you build a company. I think it's backwards. And if you could just build a company off real customer revenue, you prove that you have product market fit because you're showing, look, people are buying our stuff. Like this is a real business. Then you're showing the investor that this thing actually makes money. I think that's, if you can just do that, you're actually in a better position than somebody who's raising 20 million and then has to figure out how am I going to make money, right? Because then you're kind of stuck. So yeah.
And then our valuation is higher too, so that team as well, because now your shares, your equity has increased in value. So yeah, that makes sense. A lot of sense. Actually.
So I love that, Lily, and you know, investors come into things that are driving revenue. And that's why I like to suggest that an entrepreneur do one small thing and do it well and show revenue. Just figure out how to get revenue. Forget the big idea and come up with a small little version, a mini idea, and start to drive revenue. And then that mini thing that's driving revenue could fund the bigger vision. One of the things that I used in my company, I invested my own money at first, but then I started to bring in investors, and a early option that I used is something called a convertible promissory note, which was a note at 8% over a couple of years that gave them an option to convert into a percentage of equity. And I know Lily's going to go into this a lot more, but that loan, that note, which I didn't have to pay the principal back for 3 years, was just 8% every year, really sort of saved my neck and enabled me to have cash flow when I really needed it. Lily, do you have any more thoughts on that?
Yeah, and I want to touch on the getting the one revenue stream right. I would say that events, what I've seen from a lot of media companies, like TechCrunch is a good example. They do like events. Like everyone does an event. An event is about awareness, and they're actually very profitable. Like if you look at the income statement of an event, you know, you have sponsors that give you money, that people buy the tickets. And then if you look at how much you have to spend, it's really not that much. And so if you can just do very small scale events, it could just be like a monthly meetup. You could start making, you know, you might bring in $1,000 and spend $300, right? Like that's a pretty good margin. And so just little things like that, if you can just find those easy ways to make money, I think that's really great. So as far as structuring the money, I think convertible notes are great because you're not diluting your equity. I think it's always, like I sound like a broken record, but I think that's really the name of the game, is like really protecting your company, protecting your equity, because especially as women, you know, we want to make sure that we are, when we exit our companies, that we actually have it. Like the historic average of how much the founder owns at exit is like 15%. For women, it's like 5%. So it just goes back to like how we don't negotiate the right way, right? Like we're not, like they'll say like, somebody who works in HR will say like, well, men, when we give them a job offer, they push back. They're like, oh no, I want to get more. I want to get more vacation time or whatever. But women go, okay, thanks. And like, so as women, we have to even be more careful that we're not, it's like the social conditioning that just tells us, oh, just be polite, just be nice, just smile. It's like, no, I want more. Like, I don't want to give you that equity. I want to keep building my company. I want to use convertible notes. I don't want to just, okay, here's, you know, 25% of my company off the bat. So the longer you can hold your equity, the better. I think that's really the game of building a company, is just holding your ownership for as long as possible. Yeah.
This kind of is, so I think I have one more question. You guys brought something up and I wanted, since I have you both on here, we were talking earlier about, you know, giving shares to like an employee. What do you guys see about, I believe it's called back pay? Like if you know, what if I wanted, you know, we need to make some changes right now. We need to bring in an extra person. We don't have the means to necessarily pay them like the first 60 days, but we know bringing them in would get that money that we could pay them. Is that an approach entrepreneurs can look at, is by bringing somebody in, having some sort of contract and offering them back pay instead of necessarily stock?
Yeah, I would say deferred payment. And you could even structure it in a way like, I don't know what this person's doing. Like, let's say you do events, right? And you need somebody to come and do events. Like I used to have this gal who would do events for me, and she would get paid based on how many people she brought in, right? So I would say you can structure it that way, where it's commission-based, it's performance result-based, and that way you don't have to pull any money out of your pocket. And you also could incentivize them with, you know, some kind of partnership. Like, you know, it can be like the revenue, it can be the profit, it can be something like that. Other than equity. Of course, equity is always on the table, but I think just finding creative ways to pay people is part of building a company.
Okay.
Yeah.
Yeah. I think
All right, ladies, thank you so much. Delia, I hope you have learned a lot. I certainly have learned a lot listening to you with this incredible feedback. Lily, would you close us out today by telling us a little bit more about the course that you're offering and how it can help someone like Adelia move closer to funding?
Yeah. So I created this course, 30 Days of Mentoring, after already teaching about 10,000 entrepreneurs online. And the problem I'm trying to solve is that statistically, about 10% of people who start an online course will actually finish it, which means 90% of people who start online courses don't finish them. And the reason why is because we get busy, there's other distractions. So 30 Days of Mentoring is all about mentoring. And with mentoring, you have accountability. Every week we check in at the same time. So it's like Wednesday at 3, we check in via Skype like this, or just via phone. And so we talk about the material. So there, for 30 days, you have 30 days worth of material, and we go over it. It's every lesson has a downloadable worksheet that's shareable. So you can do your work on your customer avatar, or your financial model, or your investor pitch deck, and then you can share it with me, and then we can work on it back and forth. So you have a mentor who's like working with you. It's totally hands-on. There's things that you know, little worksheets that you have to finish each week. And I totally believe that mentoring one-on-one, utilizing the internet to distribute the content, but then having that one-on-one connection every single month is the total game changer. Like, it just changes the way you build your company. It changes the way you learn. And even Seth Godin, who's like a super, amazing educator, he was only getting like 20% completion rate in his online courses. And that's why he created his course. I think it's called Alt MBA, which is the same thing, but it's actually, I think he even meets in person. So that's what the problem I'm trying to solve is I wanted to create finance for entrepreneurs to teach entrepreneurs online, but I was seeing the same problem that Seth was seeing, that people just weren't finishing because they needed more hands-on. They needed more like one-on-one coaching, that kind of thing. So yeah, so 30 Days of Mentoring is a way of taking everything we do at Atelier Advisors, our parent company, when we work outsource CFO work with companies, and it's bringing it to like a hybrid model where you guys can consume the content online, but you have direct access to me and we work together. You share your worksheets with me and I help you work through all this stuff. Yeah, so it starts September 15th, so it starts in 10 days. There's limited spots, so if you want to sign up, I'd sign up today. It's $24.97, and that includes, at the very end, you get a list of 20 investors who have been vetted. They come from my database, and also Jody is partnering with me, and so we'll be doubling up using both of our databases. And at the end, we're going to have some really fun things where we'll have you be able to pitch live to investors. So you'll be able to practice your pitch. Yeah, it's going to be a lot of fun. Really excited about it.
Looking forward to it.
And the
Thank you
other,
so much. And
the
we
other
will
thing
have-
I just want to say, I'm also going to be participating from a coach perspective in 30 Days of Mentoring in the marketing side, because in a pitch deck, you have to have a story that wows investors and that shows what your unique point of difference is. There's a lot of competition coming into this space. So I'm going to be bringing my marketing lens and, you know, how to break through at a retail store, how to get the buyer to fall in love with you rather than all those other things that are out there. And so I'll be part of the team during this process as well. You get both Lily and myself, which is an incredible opportunity and a package for you to get that deck done, have the right ask, have the right marketing angle, and then go out and raise the money that you need.
That's awesome. It sounds like a complete package. Sounds like something I might want to take. So ladies, thank you so much. Adelia, I can't thank you enough for being willing to let us peek inside the inner workings of your business and your vulnerability in being able to share what it is that you need with the rest of us so that we can learn from it. Thank you very much for that. I think that's just fantastic. So awesome of you to do that. Lily and Jody, thank you so much for your advice and your input today. I really appreciate the depth and the value of the information that you've shared. I don't feel like you skimmed on any of the answers to just kind of touch the surface. I feel like we kind of went deep today, and I really appreciate your expertise and your generosity in sharing with Adelia and the rest of us. So I look forward to having you back again in the future. We will do more of these. I think that the audience is very receptive to this, and I think we've got more to learn. We could dig into each one of these questions over an entire episode. So I hope you'll come back and join me for this conversation as we continue to grow women entrepreneurs in cannabis. So ladies, thank you so much. We will be back with a regular Mentor Monday in 2 weeks. Until then, have a wonderful, productive end of summer, beginning of fall, and we will talk to you soon. Bye-bye.
Bye.